The Chinese government today announced it is increasing tariffs on $3 billion worth of American products. The increases go into effect today on 128 U.S. products, hitting pork, other meats, fruit, and steel especially hard. It's the latest move in an escalating conflict between the world's two largest economies, with China saying the tariffs are specifically in response to President Trump's new tariffs on Chinese steel and aluminum. Well, the trade issue put Wall Street into a tailspin today. The Dow fell 458 points. That's almost 2%. The tech-heavy NASDAQ gave up its gains for the entire year so far, dropping 3% and 193 points. And the S&P slid 58 points, down more than 2%. Trade wasn't the only factor affecting stocks. President Trump kept up his criticism of Amazon, saying it doesn't pay the Postal Service enough for shipping. And Tesla continues to face questions about that fatal crash near Mountain View about 10 days ago.
And joining us now is James McBride of the McBride Group, an investment management firm. We saw the markets today swinging more volatility. Dow down more than 450, NASDAQ down almost 200. What's your message for investors who may be nervous?
Stay calm. The economic fundamentals are absolutely terrific. And you're absolutely right. The market did close down 450 points, but at one point it was down 750 points. Typically, if things are really going from bad to worse, the market is going to close with some heavy selling at the end. The other thing I did is before I came on, I checked what the Asian markets were doing. I checked South Korea, I checked Australia, and I checked Japan. They were down by less than 1%. So that's another good sign. So the economic fundamentals are terrific. You know, the earnings for the S&P 500 are expected to be something like 20% in the first quarter, which is pretty much unheard of. And we're expecting double-digit increases in earnings for most of this year. So the fundamentals are good, the valuations are better. What's wrong with this picture?
Well, it's the fear of what could happen next, right? We have this potential trade war with China, our biggest partner, and we don't know what's going to happen tomorrow. This is only 128 products. There's a lot of products, way more than that, that are traded back and forth, and so are other aspects going to be affected by this?
Well, that's the $64 question, and you're exactly right. If this did go into a trade war, that would be devastating. The good news is if you looked at the amount of dollars that the Chinese were putting on tariffs, you know, they were in the billions, which is a lot of money to us guys. But if you look at an economy that's an $18 trillion economy, China's an $11 trillion economy, these $2, $3, $5 billion tariffs don't amount to much, and maybe everybody's saving their face until they can come to some agreement. But unfortunately, you hit the nail on the head. If it did blossom into a trade war, things would get real ugly real fast.
What's your take on Amazon? President Trump tweeting out again, attacking Amazon, saying that they're just too big, too massive, and that small businesses can't compete against that. Its stock was down 5% today following that. Where does this go?
Well, I think his criticism of Amazon were on the taxes that they don't pay on third-party sales, which is a very small portion of their overall business. So Amazon pays a lot of taxes. He was also criticizing them for hurting the U.S. Postal Service by virtue of the package delivery. That is an inaccurate analysis. Amazon helps the Postal Service by having them deliver packages. So that's a completely inaccurate analysis. But when the most powerful person in the world starts beating on you, it's not good. But Amazon is, it is what it is. It is a disruptor. It is going to affect all of our lives. But who among us doesn't use Amazon? Speaking
of disruptors, Elon Musk and Tesla, there's a lot of volatility there too, and his stock prices took a hit. So is that a signal for the rest of the tech sector as a whole? No, the concerns about Tesla are that they're not meeting their production goals, and they also have a tremendous amount of debt on their books. So the question now is, can they refinance that debt? That's sort of the open question. But, you know, the people that look at this, like Jefferies, which is a stock analyst firm, they looked at Tesla and they said, yes, we expect the stock to go down to $250 a share. So ain't nobody going bankrupt.
What about the bond market? How is the bond market faring in all of this?
That is a terrific question, because the bond market, as a lot of people say, rules the world, and the bond market is usually going to tell us something. Well, the bond market has a yield curve that goes kind of like this. The shorter end is lower than the higher end, okay? It's called a normal yield curve. That's good news. Where we all start to get worried, like in the Great Recession, is when the short-term rates become higher than the long-term rates. That's called an inverted yield curve. That's a real bad sign.
We're not there.
We're not even close.
All right. James McBride, thanks for your time. Appreciate it.
My pleasure.
A lot of information.
Yeah.
Thank you.
Thanks, James.